The webinar will begin shortly. Please remain on the line. Shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
Hello and welcome to the closing bell for January 22nd, 2025. I am Keith Harwood here for Yellow Tunnel and Tradespoon. Standard disclosures, options involve substantial risk and are not suitable for all investors. Tradespoon, Yellow Tunnel, and myself are not investment advisors, not registered with the SEC nor FINRA. If you do have questions about your own personal financial situation, please consult with a registered financial advisor. The information in this presentation is for education and information purposes only and should not be considered trade advice. And finally, myself, Keith Harwood, and or the team at Tradespoon or Yellow Tunnel may have a financial interest in the securities presented and the trade ideas. So please keep that in mind as you evaluate trade ideas discussed today for your own personal financial trading and investment portfolio suitability. We got a bull market here, folks. Netflix blew it out of the water. Seagate, STX did just almost as well. Generally speaking, we've got control in the hands of the bull, and we are testing resistance. So right now, it seems like the market's getting a bit aggressively optimistic about growth and about the policies being put in place, the inflation being under control, and the earnings coming in good. Is that justified for new highs? To be determined. Maybe we'll see it tomorrow. Maybe we'll see it Friday. Maybe we'll reject it and drop off. But I'm excited to kind of look for some opportunities here. Again, focusing on the bull side right now, especially given the control of the market, but understanding the potential risk of a pullback right now. There is no flight. There may be some profit taking. So I got to start watching for profit-taking signals. I think we certainly had some of that in Netflix with the run to 1,000 and then the pullback. But there's not a lot of bears with a lot of fight in them right now, as every time we've dipped, we continue to bounce back. Cash, always good. Probability of success to the upside. Return on capital is actually getting a little bit lower for the bull. So what I'm seeing right now in the marketplace is more buying of at-the-money options, some selling of the put side. So effectively people buying put spreads or unwinding their hedges. It would be more concerning if they're unwinding their hedges than if they are rolling their hedges. So if we are seeing people buy put spreads and buy calls, then they're still having protection to the downside, but uncapping their upside risk. If they are buying put spreads and call spreads, then they are rolling up their hedges and rolling up their buy rights. Which one is it? I'm not 100% sure right now. I don't see a good barometer right now on the call spread side of things. The put spread side of things, though, definitely seems clear. We are getting some hedging activity overall, but it is very much defined downside on that hedge. The trend is clearly in the bull's hands now. We had a breakout starting yesterday, confirmation today. Overall, bulls certainly in control. We've got a bit of a bullish trend forming for the broad market. Allocation, some sector-specific moves, but, with interest rates coming back into a comfort zone, inflation looking muted, earnings looking good, and people now starting to prop up some more of the political agenda items as good for the economy and good for the stock market. There's not a lot holding us back right now. That can obviously shift on a dime. Tomorrow we may change our viewpoint if something comes out fundamentally that changes the bull's thesis. Allowing some more time can be a benefit, especially as we are approaching a lot of earnings. So there's a few earnings tomorrow morning that look of interest. Not a ton on the earnings side that looks like it's particularly big today. You know, I think yesterday had the bigger names, obviously with Netflix's move and Netflix's potential for move and then realized move. The moves for tomorrow morning look a little bit more stable in general. Maybe GE could do something interesting. We'll take a look at some of the earnings names nonetheless. And as Vlad likes to point out, I do like iron condors a lot of times on earnings, and there is one name that I think the iron condor looks logical right now, and I'll discuss that here in a few minutes. But yeah, flexibility is key. Let's keep evaluating these markets. So the 10-year yield chilling here, 4.59. Staying below 4.65, staying above 4.5. I think we're going to get a little bit of chop in this tight range here where we had a little bit of chop before. Ultimately, we did not retest 4.5 fully. That may be tough. I think the market is just comfortable with where we sit. And again, I mean, it's such a tight range that it could happen tomorrow very easily. We just have to wait and see. And our favorite risk on / political agenda item investor proxy, Bitcoin. So we had the spike on Monday, I guess. Yeah, so it was Monday. Sorry, with the markets closed, I had to stop myself. But yes, Bitcoin was open on Monday, even though the broad markets were closed. Tested the 110 level, didn't quite get there, topped out just over 109. Right now, we're just forming this nice bullish trend. The lows are getting higher. The highs are still holding here around 107 with the spike on Monday that got us slightly above before rejecting. On the next level push through, I think if we get through there, we start looking at 115. I mean, I'm starting to hear the people talking about $1 million Bitcoin in 2025 again. That can be a bit of a warning sign that people are getting a little too ambitious with their Bitcoin predictions. But broadly speaking, this is a generally good sign of risk on behavior with a minor pullback today that's not really meaningful. I hesitate to even call it a pullback. We're above yesterday's open. We're near the highs. This is just a normal process within a bull market before it potentially goes up the elevator again. Uh-oh. Let's see here. Looks like Bob was having some technical issues. Is everybody else seeing things okay on the sound and the view? If you can just put some, you're good now. Okay, good. Thanks, Bob. But yeah, just generally speaking, I think the Bitcoin market looks pretty good. I also want to note the dollar index. So, you know, we've looked at the dollar as a potential headwind for the market as it was in this nice bull rally really since the end of September. Started to reverse. That has helped look for potential growth in non-dollar assets. So any asset tends to depreciate in value when the dollar is strong, even though it's maybe a sign of a good, strong economy. When the dollar starts to come back off, that can also be bullish for Bitcoin, gold, and we've seen oil firm, broadly speaking, over the last few weeks. So, I mean, we're seeing some good signs of monetary growth and economic growth, and the weakening dollar certainly doesn't hurt right now. If the dollar does start to bounce back and push above 110, that may be a concern, but you can sort of see here this inverse relationship to Bitcoin in particular, where we've had the falls in the dollar paired with Bitcoin spikes. And then the recovery in the dollar had a pullback in Bitcoin, and then Bitcoin finished near the highs when the dollar was finishing near recent lows, yada, yada, yada. Dollar down seems to be Bitcoin up and risk on. The S&P, as mentioned, pushing highs here. 607 and then 82 was the high today. 609.07 was the high on December 6th. So we're testing it. Yes, and thank you for bringing up CCJ, Bob. I'm glad you got the calls. I was looking at them last week. Didn't look yesterday. Shame on me. And so I did not get in yet, but I am going to look at a couple of the uranium. So the question now for the bulls is, do we push through this previous high? Do we make a new all-time high? Naturally, I would be inclined to say yes. Those stop hunting algorithms tend to like to push up if they can. So if we find strong resistance here and can't come for the market, we go back into range-bound trade. If it can push to a new high, that could set up a whole new flow of buying particularly if the market is heavily buy written. So has been long the market and short calls against it and hedged on the lows. We saw the VIX now unchanged. It was slightly up, but where we're seeing a little bit more movement here is the SKUDEX coming down again. So if I go down to a 3-month chart, we're effectively at the lows in SKU, which means that puts are not in demand, not the out of the money puts. Where people seem to be allocating their hedges is via put spreads, or maybe currently rolling up long puts that are no longer seeming relevant. As I look at the market structure, this makes some sense that you would have buyers of put spreads, knowing that 585, 580 range is going to be very difficult to breach. We've had a lot of support in that range from about 582 down to 575. And as we get higher and higher, the dip buyers start to profess their desire to buy the market by selling puts so that they can buy a pullback, or looking at other ways to just buy those dips when we start to see reversal. So we started seeing that reversal on the 14th, last Tuesday, a little bit of continuation and 3 straight days of up. And a lot of that is driven by tech. Tech is playing catch up here, getting close to those highs as well. Again, now instead of December 6th, we're December 16th. The high is 539.15, $7 to go. Semiconductors breaking out, pressing, there we go. New high here over the 6-month range. Yesterday was testing it. Today we followed through. So with semiconductors firm, that's a good leading indicator for tech. That's one of the first big breakouts here, especially after a long consolidation period. You can see NVIDIA, our big boy in the room, getting close to the highs as well. So if NVIDIA gets rejected in that 152.5 range, it's another day like today, effectively, before we get to that high. But that could be a sign that we're getting close to topping out if it can't push through 155 plus. But I got to be honest right now, I don't see a lot of reasons for the market to sell today. We're seeing really good earnings. I mean, Netflix blew it out of the water, 10% now after 998.03. So didn't quite make it in 4 figures. But you can see, the open interest and the volume on those 1,000 calls was massive. And that just proved to be a rejection point as opposed to a magnet for now. 950 getting into focus for expiration, it seems, as we settle into a price point. But Netflix, broadly speaking, their earnings were just very, very strong here. We ended up slightly more than the expected return, 8% normal move. We got about 9.5%, almost 10% now. On the highs, as I mentioned, we were closer to this previous large move of the year, the 2-year period here, closing in on 15, 16%. So it's good for the tech earnings. And now we look for, effectively what's next for tech. And that brings me back to Apple. Vlad and I were talking about Apple a bit yesterday. The RSI down to 30. We haven't seen a 30 RSI in 6 months. These pullbacks tend to be buying opportunities in Apple. If tech is going to perform, at some point, people have to start buying back Apple. I don't know that this is going to turn into like a V-shaped recovery, given the magnitude of the pullback and the concentration that people have had more into artificial intelligence, semiconductors, quantum computing, Bitcoin-related, crypto-related companies. But Apple isn't, at risk of bankruptcy or anything crazy like that. Yeah, maybe we got overbought going into the end of the year, but this pullback seems like it's too much. And for me, I think one of the natural plays, and I know I've got to hold through earnings with it because of the January 30th earnings, but if there's enough premium in like a February, it's not a lot for a 190, 200, maybe even a 200, 210 call spread. Collecting $1.50 to say that we're not going to drop another 5%. It's a contrarian play. We got to watch the earnings. We got to watch some of the sales numbers out of China. Indonesia is going to lift their iPhone ban. I'm not sure that matters that much. It's Indonesia, not China or a much bigger economy. But yeah, I'm not a bear in Apple by any means, and I think the pullback may end up being a buying opportunity. I just don't know that I want to get aggressive with it for earnings with betting on, bullish earnings, but maybe anti-bearish earnings via selling a put credit spread or looking to buy in the money debit call spread prior to earnings. And I'll look at this a bit more next week prior to their earnings on Thursday after the close. Timing on those earnings is great for those options trades because it's a one-day hold period if I do something on the 30th for these 31st options. If we get a bounce back, the normal moves only have one of those multiple standard deviation moves. If Apple does come out bearish, there may be a floor. 10% would be pretty aggressive down to 200. 5% to 210 seems also pretty aggressive. But a 5 to 10% recovery to even 235, 237 range, that's $14. That's 7%. That would be one of their bigger moves. The biggest in 2 years. In the last 5 years, we've seen 2 earnings move more than 7%. Just kind of preemptively looking at that. If we run back to 230 before earnings, then the thesis may change. I just don't see a lot of downside in Apple in the near term. One could argue for even just a tomorrow trade, very quick one-day hitter of a 217.5, 220 call spread. It's about 210 right now. So I can make, 20% for 24 hours. That seems attractive given this bounce back. And actually, as I say that, I may decide to do that in addition to my other earnings play. Yeah, so I'm going to look for real quick here, this 217.5, 220 call spread one day. And see if I can get in around 205. Seems okay if I can get it. Sorry, it's 2 days, 48 hours. It's Wednesday, not Thursday, folks. But still, 20% in a day or two doesn't look too bad at all. I may have already gotten filled. Let's see. No, sorry, it's just open. All right. So what I'm looking for is effectively the equivalent of selling this put spread for 45 cents. Currently, it looks like 43 is their value. Maybe we get a small dip and I get into that. If we get down about 20 cents from here in the last 40 minutes, that's a decent enough R&R for me. And then I can look to sell it out at 440 or 445 in the next 48 hours. 240 or 245 in the next 48 hours. So, we'll see how that plays out. But I do like that as a potential trade here. The other earnings big mover was Seagate Technology, as mentioned. We had gone up the elevator leading into earnings and then just continued through. This is a big move for Seagate, but it's not massive relative to the last 2 years. It's a little bit bigger than the last 5 years and a bit bigger than expected. But again, bullish, and it's, mass data storage infrastructure, hard drives, yada, yada, yada. So all of the computing needs that we need, it's a good sign for the global tech economy. We'll run through small caps real quick. Small caps underperforming. They're just not as exciting today because we're focused on tech again. But it's not bearish. It's just financials not getting any follow through because there's no real news in the financial market today. So they all had their good earnings. We got the run up, little consolidation. I expect to see another leg higher there. We don't really have any big earnings coming up in financials in the next 24 hours. So no real need to go up, but if a 10-year yield starts to fall back again, that may be the oomph needed to get financials moving and small caps back into focus again. First of the 2025 high that was made on January 6th. So big 2-day run here. We had a little bit of a reversal. I was starting to think about it. Honestly, I didn't do anything on Friday. Obviously, Thursday we started getting the pullback, made me a little bit hesitant, and then just pushed through for 2 straight days here. That's been great for CCJ. CCJ had options expiration on Friday and big open interest on those 55 calls that didn't come through. And then, within 72 hours of trading this week, or 48 hours of trading this week, we're through there. So unfortunate for the holder of the 55s, but, I always watch this big volume in CCJ when we're getting some of these moves. Looks like we had some sellers of the 50 call spreads, 60, 65, maybe 60, 70 call spreads. buyers of the out of the money stuff, putting more open interest into the higher strike options here. Here you can filter it by quantity here so we can see the big orders today. But you've got some rotation as opposed to full profit taking. Looks like some put spread buyers to hedge on the 5250 line, maybe rolling up to 50 puts, and out of the money call buyers. So rolling up their bullish trades by getting rid of some 55s, rolling up some put spreads, and then moving into a more bullish scenario given the uranium move. UEC also breaking out. The one that I thought might be more interesting right now, and it's a smaller dollar stock and may just be better for a stock trade though, is UUUU. Yet I expect that to get some follow through on a catch up trade. So I'm playing around with this in my head still. I'll probably wait for tomorrow given the magnitude of the move. If we get more mega follow through, I'll have missed my window. But implied volatility is up today. People are buying into these February 6 and March 6 calls, betting on that continued bullishness. And tomorrow, I think this starts to set up for a better trade. And the other one I always like to look at is Denison Mines. Again, more of a stock trade. It's a $2 stock. But those of you looking for stock-based trades, maybe DNN, UUUU, and UEC and CCJ can be a little bit better in the option space, but UEC is getting pretty close to this resistance level around 8.5. So I'm not 100% on those. Still kind of doing my evaluation, and I'll figure that out in the next 12 hours or so, 17 hours, something like that, 18 hours before tomorrow's open, so I can come up with a better strategy there and a good one going there. ANET, yeah, bullish today. Did not see if it's independent news. Let's see, Arista Networks. News. It's all about the Stargate AI project prospects. So I guess they're heavily involved with the Stargate AI project. So I guess a natural follow through with some of the commentary, and this is what we've got right now. New president talking up new initiatives. Stargate AI starts getting talked about a lot. And ANET is jumping on the back of that. So there you go, Bob. That's all about Stargate AI. The other AI names, Palantir, Firm, AI, with their Microsoft partnership, still lagging, but somewhat firm here. Maybe a buying opportunity, but we did touch resistance. My favorite smaller name, Path. I get intrigued very soon here. So if AI continues to be pushed, if this can get above the 200-day moving average, I know it's another 50 cents, but it could happen in a day. That starts setting up for 15.5 or 16. So if AI stays in focus for another day or two, and we start seeing more follow through from some of these other names, this can be my late to the party trade, as opposed to jumping into what's likely the best option, which would be like Palantir or ANET. But I can still potentially get onto the boat with UiPath down the line here, and we don't have to worry about earnings there for a couple of months. So at least I don't have to worry about that potential headwind or that potential independent risk. It's just a name that I like for AI when I'm looking for it. All right. Do earnings first. Particularly focused on KMI. As you guys, many of you know, I'm in KMI from the AI generated signals for paid. It's already had a nice run leading up to earnings. There is a bit of adverse potential risk here. So usually looking for about 1.5%, maybe 2%. Yesterday's concern, even if we have a 2 standard deviation move, it's a pullback down towards yesterday's low. 2% of this 30.5, a full 4% would put us down just below 30. Given the piling into this trade heading into earnings and the general overall flow, I think there's just a little bit of natural profit taking ahead of the earnings this afternoon, and I'm going to just be watching it. I'm in the February 31 calls. I paid a little bit more since I bought them yesterday. You can see they're 90 cents now. They were about $1 yesterday, so down about 10%. But I knew when I was getting in that, this is a hold through earnings, and see what happens. And if there's a slightly greater than 50% chance, I think, of bullish earnings. Otherwise, we wouldn't be making new highs ahead of time. I can hopefully see some good appreciation after the close on the probability side of things. I'm not looking for much more than $1 though. So it's not a big earnings type play outside of just an AI directional type play here for me. The other earnings we've got are Alcoa. It's such a minimal mover on earnings and a $39 stock. I mean, we're normally looking for 3%. It's been weak. Over the last 5 years, really over the last 3 years, we haven't had much bullishness ever. We did have a couple of big spikes in 21 and 22, but for 5%, that would put us towards 42, maybe some resistance there. I guess 41 and a half. Oh, sorry, 40 and a half, 41 level. It's hard for me to see a good pinpoint on an options trading Alcoa for earnings, so I'm not going to spend a ton of time there on it. GE could be more meaningful. We have been seeing moves around 6%. The implied is right at that 6%, especially the last year and change, year and a half. We've been seeing moves between 6 and 8%. So if I go for another normal 8% type move, we're talking about 7 and let's see, 8%, about $15. So that would be a new all-time high. On the downside, I think we're looking around 171. That'd be 9%. The options right now, there's a pretty spread open interest here with a heavy focus on the 180s. It should normally naturally be a focus on the 200s, but it's not there with the short weekly right after the serial expiration. I'm having a hard time pinpointing anything in GE, honestly. I think I'm going to pass on that. But AAL, I think, has a little bit more potential interest. And I'll show you why here. So we're sitting near the highs. United, Delta, both had relatively okay moves here. Delta moved more than the norm with a 9% move. United, a 6% move. AAL is normally about a 2% move. We've had one 10% move. Even if we get a full 10%, like we did in January of 24, that puts us down just below 17 or just above 20. So I'm looking at an iron condor selling 17s, buying the 16s, selling the 20s, buying the 21s. The 2021 is about 16 cents. The 1617 is about 12 cents. So it's about 28 cents for the iron condor. I got in a little lower than that, it looks like. Yes, I did get in for 25 cents. So it just started going bid right as we were talking. Somebody's buying a little bit of movement here, but I'm in that for a quarter. The 16, 17, 20, 21 iron condor. Just a small trade, test it out, see how it works. Look to make effectively a quarter on 75 cents of risk. And as long as we stay within our normal band and don't have a 2 to 3 standard deviation move relative to expectations and about a 4 standard deviation move relative to historical, I should be in pretty good shape here. So you can see a ton of open interest here at 18. Looks like somebody's basically betting big on the bearish bias, but probably selling those, well, actually probably just covering those 16 puts now that I say it for hedge. Maybe it is all put spread sellers because nobody wants to sell 2-cent options unless they're doing it to protect. So as I say it, maybe we're looking at call buyers. So betting bullish and financing it by selling some 18 and 17 puts, protecting by buying back the 16 put. So for those looking on the directional bias, I think that makes some sense, selling those 17, 16 put spreads to buy maybe 19 and a half, 20 and a half call spread. It's going to cost a little bit of money, but at least it's cost reduced. For me, I'm looking at, or I just did the betting on less than $1.50. So I'm betting on under 8% on the move. And like I said, 8% has been a pretty safe bet over the last 2 years. One time it's done more than that. And over the last 5 years, twice we've moved more than 8%. So, we'll see. Maybe we get that outlier move this time of 15%, but I think the odds are in my favor that risking 75 to make a quarter even. So that's my one earnings trade for today. Other than KMI, I'll touch base on the other two that we've got right now that are actually pulling back a little bit. eBay down small today. It's right near that support level. We've dipped down here before starting up a bullish end to the week last week. I'm not looking for this again to go back to 70, the post-meta announcement level, 70, 71. I'm looking for just a recovery back to 66 or higher, 66 and a half this week. We'll see if that end of week flow continues like we saw last week. But right now, it just looks like the downside is pretty limited. The upside may be decent up to 66 before we hit resistance. So we'll see how that plays out. And then finally, what was my other one? KMI, eBay, VSX, Boston Scientific. So new high today, now consolidating. RSI over 70. I'm not necessarily shocked. It's not we'll see if that money flow picks back up on the open tomorrow. We had buyers on the open again today, and then a little bit of profit taking, maybe some rotation out as people look to allocate to more news-centric ideas for today. But again, not a bad chart here, still well above yesterday's low. Sorry, today's low is above yesterday's low. Today's high is above yesterday's high. The only yellow flag is that we're back in yesterday's range. New aggressive power trader names for today, Fastenal. Ended up unchanged on earnings a couple of days ago on Friday. Just a dead sit. And now looking to see if this can be a good sign of some economic growth here. As a reminder, they do construction supplies, machinery keys, concrete anchors, metal framing systems, whatever. It's all signs of economic growth if they continue firm here. If I'm not going to add anything with this, but I think 75 should provide some pretty good support, only a buck lower. We'll see if that dips at all to that point or if it just drifts higher. Philip Morris, I normally look at with utilities, a nice run the last 2 days. And you can see XLU getting a little bit of a pullback after a nice 3-day run. So for me, again, I'm not looking to do anything with Philip Morris. It's got a good dividend yield. Altria does too, but Altria is in the dirt right now. So PM had been the laggard initially, pulling back in November and then pulling back aggressively here at the beginning of January. Versus MO didn't pull back in November and then caught back up on the dip here in January, but didn't get below the October lows the way Philip Morris did. So maybe there's some relative value trade there. The dividend yield here for dividend yield, that could be a bellwether for Philip Morris or Altria. And finally, on there, we got Regions Financial earnings on Friday, rallied and dipped, kind of a boring move. But again, I think we're just looking for general financial asset allocation. So if people go into financials, that could be back in RF's favor. I think if we get above the 50-day moving average, that's a better sign of something real here. We are sitting above the 100-day moving average, which is good. But until we get a little bit more momentum and get above this earnings high, which aligns with the 50-day moving average, a couple of different potential trigger reasons to be buying above 25. That could be an interesting trade at that point. But again, for me right now, it's kind of a boring looking chart for today. One could possibly bet on 25, but that's back to a stock trade in my view. All right. So now, uranium just started dipping. So we can look at this. Getting a little pullback here in uranium into the close. So some profit taking on that. CCJ coming back a little bit. Maybe that'll actually generate a buying opportunity for UUUU or UEC. So I'm still going to look at that in the morning, but that's no longer the biggest mover of the day. The biggest movers of the day that I see in terms of standard deviations are the OIH pullback. So that's been on a tear and then finally rejected the 200-day moving average and pulled back. XLE kind of hand in hand with that. So the energy name's getting a little pullback. And then XLK being the big winner on the back of Netflix and Seagate earnings. The other one that's actually getting hit a little bit more here today is solar. So you may recall we were wondering A, why, but B, if solar was going to become a leader, and that's not the case anymore. First solar now to a new low on the last 6 months. So solar bears, we're still seeing that downward trend line. This is going to be a really good potential entry point for either the bull or the bear if we can get back to it. You could bet on continuation to the downside, but now 6% down on the day. And for solar, I'm not sure I want to go too aggressive with that now. If we get a bounce back, though, and retest that trend line, that's been our level to sell rallies in First Solar. And I think I like the idea of selling bounces instead of piling in after a 6% down day. So every time we've gotten down here, we've tried to test and then recover. So I'm going to look for a recovery sell in First Solar type names. Yes, VSX is definitely very overbought, and that I think is the concern point for me on it. For AI-driven names, I look for them based upon just the AI and the analytics that layered on top of them. I'm a little concerned by the overbought status. We haven't seen RSIs holding too aggressively over the 70 level, but during those periods where we've got those nice runs and the RSI gets up here, we still seem to have a positive drift. So as long as we can continue to get a positive drift, that's all I need for a 3-day trade. Tomorrow, I think will be very telling. If we start to make a lower low, so if we get below 100 and change, call it below $100, $100.17 is today's low, that may be a signal that the buyers have finally run out. Time will tell on this. I'm just going to trust the systems for now, see what they do, and I hope they're right when, like you said, Fred, my inclination would be a possible pullback here, but I got to just follow the mechanics of the system and trust that those evaluations have worked historically. So I'm going to keep trusting it now, and if it stops working, then reevaluate the inputs, right? And that's the joy of AI. We reevaluate the inputs on a continuous basis. So, yeah, Bob, I mean, gas down. So, Williams companies, I'm in the Feb 60s now. I said I was debating switching to One Oak. I didn't. I decided to stick with WMB. I considered switching to LNG. Glad I didn't do that. That was way overbought, and now it's got the big pullback because of how overbought it was. So that's that risk on the profit taking and liquidation side. When you get the elevator up, it can be a bit painful when people start to try to pull out after this spike. But KMI, WMB are holding up okay here. I'm in both of them. WMB Feb 60s and KMI Feb 31s. And again, this is going to be very earnings dependent to a certain extent here. In about 20 minutes, we should see the earnings. If we get a bullish reaction, that'll help both of those positions for me. So, cross your fingers for me. And yeah, again, STX, just an incredible day today. For this one, we had the elevator up into earnings and we gapped higher on earnings. And now I'm looking for probably some consolidation, but yeah, I think this one could be a coin flip. We didn't have a pullback like we did in Netflix where we had the major bullish reaction and then a pullback from the open. We're right where we opened. That can be a good sign for the bull. Netflix still holding up very strong and staying above the previous highs. Don't get me wrong, it's not bearish by any means, but I don't have to worry about it for now being like a FedEx type reaction where we had the big bullish reaction and then a pullback to unchanged on earnings day. That would have been a very negative sign for STX or Netflix if we had done something like that, and that's just not the case. It's still a bullish setup. It's just a matter of how much more bullish from here. Let's go back to some of the individual names. So we have, another one, Microsoft, so big tech starting to participate outside of Apple. That was a nice one. J&J had earnings, and they're right down to support and then bounce. 2% move is actually a decent sized move for J&J on earnings. It's right in line. So the market had it priced right. If you bet on the 2% move, you're happy. Otherwise, you probably didn't make or lose money. Buying or selling the straddle was a wash for all the participants there. Had to be very specific on the strike. So if you pinned 145 pinpointed 145 because of the normal earnings move, fine. If you sold an iron condor, fine. Otherwise, there's not much to it other than just the fact that it moved on earnings. Southern. Yeah, so this is part of that utility pullback, the breakout and then fade hard. I will say it reminds me a bit of Sting. The Sting hurt for the bulls yesterday. So the pullback on the 17th was given a lot of warning signs getting below the 10-day moving average. I would not have expected this magnitude of a pullback yesterday, personally. But now I think this goes back to looking for prices above that 51 range. And as we get back above 51, potential re-engagement with the April 55-65 call spread. But for now, I don't see a lot for it until it starts to get bought back up. Just a bigger move to the downside than I expected. I was looking for the bull flag to set up where we pull back like this and then bounce. And instead we just got follow through as the market pitched the idea of tankers being good. You can see it in TK as well, NAT. These names have all just gotten after a 4-day bull run, got a 4-day bear run afterwards. Yeah. So on the uranium stocks that you mentioned, Bob, we looked at UEC, DNN. I haven't looked at NXC. Is there any? That's kind of similar to UUUU. Didn't get above the January 6th high. And an 840 potential target. I don't know that there's enough juice. Yeah, buying the $8 calls for 40 cents just looks like a break-even trade if I'm right. I think it's more of an stock trade. LEU, lower volume name. Maybe you could get to 105 if uranium continues. EU. That must be a different one because that's a Euro debt something. Euro Y. Uranium royalty. Okay, another stock trade, $2.50 stock. Just use like 240 as a stopping point if uranium pulls back. URG. Another stock trade, $1.18-ish for the stop out that I would use. So 4 cents risk for a dime gain. 132, 135, 136, maybe something in that range. I think the most liquid one is going to be CCJ. And now that it's starting to pull back, this could be setting up that February 55-60 call spread if we can dip a little bit. 55-60 doesn't seem like enough. I got to watch this tomorrow. If we get the pullback like we did just now in like utilities and other stuff. So we had the breakout. If we reject it tomorrow and get below today's low, then the party may be over. But if uranium holds where it's at, maybe there's a good follow-through trade there targeting 60. Switch over to crypto names. MSTR, one of the biggest holders of Bitcoin. There's going to be some resistance there at $400, but this looks like it is just prepping for a potential explosion again. And one of the things I do like about this is this implied volatility continuing to fall, as I mentioned before. If I can stay under 100% implied volatility, earnings may be becoming a problem being only 2 weeks away. But if we hold here, that earnings date may be too daunting to get into MSTR. All right, go smaller, later earnings. Marathon saw some decent activity for today's Friday's options today. We saw a bunch of buyers of the Jan 20 calls earlier today. They were paying around 50, 51 when they were buying them. Well, it looks like somebody did maybe took off an asymmetric butterfly of some sort. They're selling the 20s and the 23.5s and buying in the 22s and the 20. Oh, I see. It was 2 call spreads. Never mind. So selling that call spread to buy the January. So buying in the January 4th call spread, the 22, 23.5, and selling the 2022 for next week. But you can see there were some other buyers, like 1,200 of these 2022 call spreads for this week got bought as well. Anyway, just generally some decent bullish flow here on the short term. If Bitcoin goes bullish, Mara, Riot, or BTDR are 3 of the names I go to quickly. And then now I look at HUT. Thanks to Bob's mention on that. That's actually starting to show some decent bounce back here. So we did make a lower low. If we can get above today's high tomorrow and Bitcoin looks firm, I'm thinking HUT could be the play here. Lowest implied volatility we've seen in 6 months. So, I mean, Feb 30 calls, I know it looks like they were being sold today, and there's not a ton of liquidity, so definitely need to get markets to tighten up for this type of trade. But it looks like there were some some sellers of calls today helping push the implied volatility down. And if Bitcoin resumes its uptrend and tries to press towards 109 again, it basically gets above 107.5. HUT may be a potential winner here, betting on bullish with implied volatility increasing. Because if it starts to rally and Bitcoin breaks out, then there could be a scramble to buy calls in some of these Bitcoin-related, crypto-related names, and HUT would be one that I would definitely look at there. ARCX is the space one. Yes, it is. Yeah, so sitting at the highs, ARCK, but ARCK, one of their biggest holdings is, I think, Roku. I don't necessarily think of them as being majorly innovative from a personal bias. It's just, it's a streaming device, but ARCK is looking good here as it breaks out of the recent range. Kind of setting up similarly to just tech on the whole. The one's ARCG. A smaller volume, still decent volume, but that could be interesting as well. We'll see. Oh, Boyd. Testing the highs. What's Win doing? Win still weak. MGM. Yeah, so in a world of weak casinos, Boyd certainly looks the best. That's interesting. I mean, you've got a major headwind here in the fact that every other casino name seems to be getting hit. I don't think I'd want it yet, but maybe with a new high, getting above, let's see, today's high was 76.70, 76.73. So if we get another $1.25, call it, get up towards 77, that gets Boyd a little bit more. Yeah, so Fred, I think as I mentioned right now, it might be, I think for Sting, I mean, the April timeframe does give a lot of time for this to try again. Right now, I need to get some signal that it's trying again. And that means that for now, I'd be missing the first $3 of a recovery. Above 51 and a quarter, I get more excited about this again. It may happen tomorrow, and then I'm regretting not buying at the lows here. But for now, there's nobody seeming to buy into the tankers on the whole. So I want to wait. And if we consolidate down here for a few days and then start to round out a recovery, then maybe I can get in before 51. But right now, I'm looking at 51 as my signal to get back interested in STNG. The move on Friday, it turned out, was dead on because Tuesday we just collapsed on it. So getting below that 10-day moving average and below the highs of January 7th, in hindsight, was definitely the signal that this market wasn't particularly interested in staying with the tankers any longer. So, as a contrarian play, we're near enough the lows that maybe there's something there, but I think waiting a few days and just continuing to monitor that April call spread timing is the key for me. So I'll wait, as I said, and check it every day until I see a better setup. All right, we got about 5 minutes left here. Any other stocks you guys are keyed in on? Oracle, that's a darn nice run off of Stargate as well. So ANET and Oracle were the two benefactors of Stargate, it seems, or the biggest benefactors of it. Does Microsoft have? Yeah, I was going to say, I assume Microsoft has some input from that as well. So now they're mentioning a Stargate as news for Microsoft, so they must have been part of that that rationale. And love drifting down a little bit. AAL, like I said, I'm in that iron condor now. Apple, it doesn't look like I'm going to get my call spread, but I don't want to pay. I don't want to pay up for that. It's down to 32 cents. So I liked it for, well, I was doing the debit call spread. I mean, I liked the credit put spread for 45, but I don't know that it's enough for 32. Now it's starting to get too low of return. So I'll just focus on the AAL trade for now. And as a reminder, I'm in the 1716 and 2021. So it's now 15. It's about 26 cents. I'm in for a quarter. So we'll see how it plays out. But looking to collect 23 or 24 cents, because if we stay in the range off of earnings, I'll just hold it for 48 hours, exit late in the day on Friday. And then if we do move, I'll have to manage that trade tomorrow. Maybe buy stock if we're rallying or sell stock if we're selling off. All right. Oh, yeah, Tesla. Department of Government Efficiency had so we've done bounce and fade, bounce and fade, bounce. So from a short-term downtrend, we had that look. I'm thinking just waiting for a bull flag here. Get rid of this. So we've had now a lower high and a lower low inside day to day. If tomorrow we get above today's high, it starts setting up for that 465 to 480 potential target. 465, I think, will be a big level. We were only above it for a very short time period in mid-December. So 465 is my short-term target on the bull side if we get above today's high tomorrow. So above 428. It's not a huge move. Is there enough to do probably not for tomorrow or for Friday? I mean, yeah, there's not enough premium to do much on the 400. Is there enough on the 400s? $2. Kind of similar to Apple. If I say stay above 400, I could collect about 45 cents on the 397.5 400 put credit spread, aka paying 205 on the call spread. I'm a little leery of it being Tesla though. I'd say I'll just hold off and probably I'll look at earnings, but the way that these options are priced, I usually avoid it because, the at the money calls are all, $4,000 a contract or more. Go to February and they're $3,200 to be in an at the money call. I think it's a hangout. If anything, it's a put credit spread, but I don't want to do a put credit spread expiring anything after this Friday, given that we've got earnings next week. Yeah, I mean, I think that if you're in the Tesla calls, just watch that implied volatility coming into earnings. It's not as high as it can be, certainly. The earnings analysis is showing a smaller than a realized move traditionally. But there will still be some Vega risk as volatility comes off after earnings. So if we have a bearish day on earnings, get hit twice if you're long calls. So I think rotating into a call spread may make some sense in Tesla. And yes, Ted, I am still holding the eBay. I'll hold through Friday. Not a great close today for eBay, though. That's to be sure. So got to get a little bit of luck and a little bit of excitement around eBay heading into the end of the week. But I'm going to hold it through Friday and just hope that something changes the market sentiment and money flow on it in the next 48 hours. So, all right, folks, I'm going to let you go on that. I'll be back on tomorrow morning. We'll talk through the earnings and KMI and American in particular, since I've got positions on those two, and we'll see what else is shaping up for a potentially interesting day tomorrow. Thanks again, everybody.